Hello, good evening, everyone. Good evening, everyone. Please confirm if you can hear me, please.
Good evening. I can hear you.
Good evening.
Good evening, sir. I can hear you.
Good evening. I can hear you, sir. Good evening.
All right. So we will not waste time. We will have to go straight to the point. But after a brief introduction, right? Beside the fact that we want to use this particular platform to enlightening each other, we also want it to be a podium where we can actually relate and connect with each other, right? My name is Adekunle Cole. I am the managing partner of KCP. I'm sure quite a number of you already know KCP. KCP is a firm of professional accountants. We render tax services, audit services, regulatory services, HR related services, account support services, and of course, one of our foremost services we are benefiting from now, that is the training services. I also want to believe that everybody is aware that this training is not just a one-off training. It is for a stretch period of a minimum of 12 weeks, and we shall be considering topical issues in financial reporting, taxation, and auditing. Please let everyone mute their mic, please. Mute all mics. Mute your mic, please. Tosin Adegbola, mute your mic. Danjuma, please mute your mic. All right, so it's a 12-week stretch training that we covers relevant topical issues in financial reporting, in taxation, tax services, in auditing. So it is a wonderful opportunity for everyone to actually add to what you have known before. And for those who does not have insight about this before, it is another opportunity for you to actually enrich your knowledge. For the benefit of those who might have had understanding or a fair knowledge about some of the things we'll be talking about today, please don't distract others. I want to believe that if you pay due attention, you will definitely gain one or two things in the course of our discourse today. Please mute all mics. Who is this person? All right, so for proper interaction in the course of this session, if you want to ask questions or you need clarification on anything, we can actually use the chat box to interact, right? Okay, so let's start. So using the chat box, please confirm if you can see my screen. Just indicate yes if you can see my screen. Okay, so we are good to go. So once again, I want to appreciate each and every one of you for creating time out of your busy schedules to attending this. Don't forget that same time tomorrow and on Sunday, we'll be having other topics slated for this week, and that will be the custom in the next 12 weeks. All right, so under financial reporting, this is the first topic we'll be having today. We call it charts of accounts. So what does this mean? What are you expected to knowing about this? What are the relevance of this to financial reporting? Don't forget, this is a topic under financial reporting. Please mute all mics. Mute all mics to avoid distraction, please. Oshodi Ahmed, please mute your mic. I think the noise is coming from your end.
Sorry, sir.
All right, so unlike the regular courses that or the topic that you will have learned in school or in the course of your ICANN program, chart of accounts is unique, and it is the fundamentals of you being able to preparing financial statements. Before you know, or before you go ahead to debiting an account and crediting a ledger, what is the fundamentals about the structure of the financial reporting of a particular entity? And the requisite chart of accounts for company A may not necessarily be the same with company B, right? So that being said, what are the things you need to know if you want to set up chart of accounts for a company? For those who are already taking up, who have already taken up an accounting role, or whose company is not using a structured or an automated accounting software, if you fall into those categories, please pay due attention. This topic will help you in putting up a structured, at least an automated through an Excel structured chart of account for your company. And by so doing, you will have a better outlook of financial reports. So please, I wish you a very good session. Please listen as we go on. So in the course of this, we'll be looking at the following outlines. We need to refresh our understanding about who are truly the users of financial statements. Why did they need the financial statement? Of what relevance is there? Is the financial statement to them? It is only when you bear all of these at heart that you'll be able to know what requisite information do you need to disclose in the financial statement. And the intended information to be disclosed in these financial statements will also inform what are the relevant elements of an account that will be embodied in your financial statement. And those elements of financial elements of account will also inform how you are to structure your chart of accounts. So in the course of this, we'll talk about this and we'll link it to the topic of discussion. Second one is components of financial statement. What are the things that actually makes up a financial statement when you see one? One unique thing to us in KCP is that we don't just tell you things, we actually relate it to the substantive standards or the laws. So in the course of our deliberation today, each of the topical issues we are discussing, we will relate it to where applicable, the applicable standards or the substantive legal provisions. We will also talk about elements of account. What are the things that we even call elements of an account? Where does this particular terminology actually hails from? And what are the examples of what we call elements of an account? Then we will discuss how to design the chart of accounts. We'll go further from there to creating components of each of the elements of the chart of accounts. We teach and explain how to map the chart of account to what we call extended trial balance. Extended trial balance is not new to those who had worked in an audit environment. But for the benefit of those who have never worked in an audit environment, this is a real opportunity for you. I believe and I trust that you will make the best of it. Then finally, you will see how to set up financial reporting templates from the ETB. So I want to be sure that we are still together, and please confirm to me if I'm not too fast. If it is so, just say I on the chat box. But if I'm too fast, say low. If I'm not too fast, say high. But if I'm too fast, say low. Okay, okay, so we are good. All right. There is a common saying that says when the purpose of a thing is not known, then abuse of it is inevitable. So why are we actually doing this training? And I would like to put this word for word. There is an urgent need to bridging the skill gap among accountants, particularly among the new entrants into the profession. We have observed over the years in the course of our work, interacting with accountants of various companies, or even interviewing prospective accountants to taking up an accounting role, we identify that there is a huge knowledge gap. There is a difference between all that you have learned in a theoretical environment or in a classroom compared to what is expected of you in the workspace. Our society celebrates academic and professional qualifications over skill sets required for the job. There are many accountants who has not acquired the fundamental working skills required for an admirable practice. In this training, and all through this 10 to 12 weeks mentorship semester, we shall be conducting training on fundamental topical issues in financial reporting, so promoting requisite skills among fellow professional accountants, I mean there. So why are we doing this? We are trying as much as possible to bridge the knowledge gap among fellow professional accountants, and I believe that you will take this in good faith and you will make the best of it. All right, let's make this very interactive. Who do you think are the users of financial statements? If you have an idea, please use the chat box. Who do you think are the users of financial statements? If you have an idea, just put it in the chat box. Hello, are we there? Board of Directors, correct? Francis, very correct. Management, shareholders, customers, internal and external users, the government, absolutely, correct, correct. Creditors, very correct. Creditors and tax authority, very correct. Investors, all right, so that's good. That's good. Debtors too, you need accounting information. So the users of financial statements are as important as the purpose or the process that gave rise to the prepared statement. So it is not only important that these users want to use financial statements, but also we should pay due attention to the process that give rise to the information they use. But in simplicity, we can categorize the users into two: the internal users and the external users. The internal users are within the organization. So by so doing, you are referring to the shareholders. They are part of the internal users. The board of directors, they are part of the internal users. The employees, they are within the organization. They are part of the internal users. Any other user that is not within the organization is said to be external users. So in that bucket, you'll be having the government, the creditors, the bank, the external investors named there. So we have identified the users. Why do you think each of these users needs accounting information? Their need is not the same. Why the employee needs the accounting information or the financial statements of an organization is not same with why the government needs it. So let's confirm. Why do you think the government needs it? The government on its side wants to know how many people are gainfully employed in the country part-time. So to assess this information, one of the feeders to the information they need will have been gotten from the financial statement of various organizations. How many companies do we have in the private sector vis-a-vis the public sector? If in an economy where you have more private sectors, more investors or entrepreneurs in the private sector as compared with the public sector, it tells you that it is more likely that the teeming employable population may likely be employed. Among other reasons that the government needs it is also for tax purpose. We all know that tax is one of the major sources of financing governmental responsibility. So to know how much XYZ company is to pay, we as the government need to collect or obtain from those companies their financial statement, possibly or most likely the audited one, and recompute for tax purpose to ascertain what their tax exposure will be. During the tax section, we'll be talking more about how the taxes are computed and the likes. That would be in the tax class. But for the purpose of this session, we are dedicating it to financial reporting. All right. Remember in my previous slide, I said the purpose for which a financial statement is required is as important as the process that gives rise to that financial statement. If that is true, then when you want to prepare financial statements, there are two major regulations or guidance that preparers of financial statements are expected to adhere to. What are these? So I put this as the financial statements are prepared in strict adherence to 1, the legal and regulatory framework. Then 2, the accounting standards. When we say legal and regulatory frameworks, what are we saying? What are we referring to? There are laws in the land or in every country which every government has put in place to actually make as reliable as possible information imputed into the process of preparing financial statements. So part of this legal frameworks is what gave rise to ICAN. Why? The government is interested in sanitizing the accounting profession. Therefore, it can't do it on its own. It has to legally institute a regulatory body that will administer the affairs of training students to becoming accountants, conducting the examination, and also maintaining the practice. So it is part of the frameworks relevant to financial statements. Other regulations, other legal provisions there are various enactments that have been made in the form of a in the form of a law that should regulate how companies' affairs and the process of preparing financial statements should be monitored. What are these things? Number one, we talk about the CAMA. CAMA means what? Who has an idea? Can you confirm on the chat box? CAMA means what? Who has an idea? Tell us what CAMA means. What is the full meaning of CAMA? I hope we are together. Company and Allied Matters Act. You didn't indicate the act there. Okay, so you might get it. Companies and Allied Matters Act. That is what CAMA means. So CAMA is a very important document, legal document, that actually helps in validating and regulating the process of financial statements. And you may ask how and where. A requisite provisions in CAMA provides what should be the components of your financial statement. It also dictates the responsibilities of those who are charged with preparing financial statements. You'll be learning more about this in our auditing class, right? But just bear it in mind that one of the legal framework that helps in authenticating or regulating the process of preparing financial statements is legal framework. An example of that is CAMA. Who can give me other examples under legal framework? Besides CAMA, what other examples do you think should come under legal frameworks? Who has an idea? Anybody? No, it's not. IFRS does not come in under legal framework. That is not correct. Insurance Act, very correct. BOFIA, Tunde, very good. Banks and Other Finance, that is a BOFIA, very correct. But we still have more. NDIC Act, very correct. NSC Act is also there. NICOM is also there. So these are various legal frameworks that have been instituted to regulate the process of preparing financial statements. Most definitely, while CAMA is applicable to companies irrespective of their industry, most other documents that you have mentioned, like the BOFIA, relates to those who are actually or strictly operating within the banking and other financial industry, right? NICOM relates to those who are operating within the insurance sector, right? So NSC Act refers to or relates to every organization whose shares are tradable or quoted on the stock exchange market. So as accountants, it is not enough for you to know how to debit and credit, but you should also have a good understanding of what are the legal provisions or frameworks that could impact the account of the company in the industry I am working, right? So I will expect that everybody will take it out from here today, that you will identify the industry where you work, you will identify the enabling legal framework that is applicable there, in addition to CAMA, and you will go thereafter to downloading or source for this document and read from beginning to the end. So having an understanding of what your regulations or responsibilities should be. Say, for example, if I am an accountant and I'm working in an insurance company, if I have not gone through the provisions of the Insurance Act and the NICOM, then I'm not doing the right thing. I may be doing the right thing, but not knowing reason for doing what you have been doing. So the best advice for you is that for those who are in a particular industry, try as much as possible to identify the applicable legal framework that could have impact on the financial statement that you are preparing. And if, say, you want to change switch job or you are targeting a particular job with a company in another industry, one of the best way to preparing for that is identify the requisite legal documents that may impact the process of you preparing the financials of those companies, study them, and possibly engage in discussion on this with your colleagues for you to concretize your understanding of the provisions. Having said that, we've been able to identify those who want to switch jobs. What about those who are in the professional practice, those who work in audit firms? The number of legal documents you need to be abreast of is not limited, because for those operating in that sector, they most definitely will have clients across various industries. So it is not enough for you to identify yourself as an auditor without being able to speak to the legal provisions of why certain things should be done in certain way. So this is a point of call to, this is a call to action for everyone to ensure that we don't just listen to what will be said here today, but certain assignment will be given to you and you are expected to act on them accordingly. I'm getting some feedback that some people could not see my screen. Please, can you reaffirm if that is still so? Is there anyone who cannot see my screen besides Khadija and Tunde? Oh, okay, so, oh, okay, so just give me a minute, let me reconnect. I've just reshared the screen. Confirm if you can see it now, please.
Hello, we can see it now. Go on.
Okay. Okay, good. Good. All right, so what is the takeout from the first explanation I've made, the legal frameworks? I've given you examples of this. In our various jobs, in the companies or in the industry where we work, let's make sure that as accountants, we are abreast of every legal provisions in that industry as contained in those documents that could have impact on the financials we are preparing. The second one, still a twin of the legal framework, is the regulatory frameworks. From time to time, various regulators, such as ICANN, such as FRCN, provides or gives various guidance that could impact the disclosures in the financial statements. So it is also expected of us to be abreast of these various regulatory framework. Who can tell me the full meaning of FRCN? If you have the idea, just put it on the chat box, please.
Okay,
FRCN.
Financial Reporting Council of Nigeria.
Okay, what is the enabling law or act that actually introduced FRCN? Anybody who is aware, please don't go to the internet to check. Oh. What is the enabling law that actually legitimates FRCN? FRCN Act of 2011. That Tohib actually got it correctly. Please note, it is not enough just from the takings from this section today. It is not enough for you to know the acts, to know the name of the act. But more importantly, you need to know the provisions as contained in the act. Is that clear? So please take note of that. Who knows the enabling act that introduced or legitimate ICANN? What was the act that legitimate ICANN? Ah, Lawal, it is not so. It is not IASB. It's not IASB, it's an assignment for everyone. Okay, somebody just got it. So I hope you are not checking this online. So Hib, are you there? Okay.
Yes, sir.
Okay, I
Not
want
at
to
all,
trust
sir.
your opinion.
Not at all, sir.
Okay, good. So it's good. So as accountants or accountants to be or accountants in training, we are expected to have copies of all these legal documents because it helps us in knowing why certain things are done in the way they are done, right? So from time to time, all of these regulators give regulatory guidelines on how certain things should be done in certain way. If you remember, sometimes in 2020, during the mid of COVID, FRCN came up with a guideline which is expected to be adhered to by every accountant preparing financial statement that will impact, that COVID will impact. Who remember what provision was given by FRCN then? There was a guidance that FRCN introduced in 2020 for those who have not prepared their financial statements for that period or period before that period that would have been impacted by COVID. What was the guidance that FRCN introduced then? And that guidance was related to what? Okay, because of time, no, it was not minimum tax. Oh, chai. Oluwase, it's not minimum tax. Agbaje is not EBITDA. It's not EBITDA. Rather, it was how COVID-19 would exactly. Who is Nokia 5.1? What is your name? Just indicate your name, please. All right, so it was how COVID will have an impact on the financial statement. And that was related to IAS 10, right? So that is what you need to know because of that so that we can be able to address the main cause of concern. Then the second one is accounting standards, right? We all know that accounting standard will, in addition to the legal and regulatory framework, will have an impact on the disclosures made in the financial statements. So that being so, what are examples of these standards? What are examples of these accounting standards? Basically, across the world, we have two main standards. It used to be three. We used to have SAS in Nigeria. We used to have IAS internationally. Then we have one other one which we call the US GAAP. But with effect from the adoption of IFRS in Nigeria, there are basically two, except for those countries who have not fully complied with IFRS. So there are IFRS and the US GAAP. I'm sure you are aware that US has not adopted IFRS. So according to IAS 1, the following are the components of financial statements. If you want to reconfirm this, you check paragraph 10 of IAS 1, you will see it being enumerated there. We have the statement of financial position. We have the statement of profit or loss and other comprehensive income. We have the statement of changes in equity. We have the statement of cash flow, and you have the notes to the account. You also have comparative information in respect of the preceding period and the statement of financial position at the beginning period when an entity applies accounting policy retrospectively, or when it makes a retrospective restatement of items in the financial statement, or when it reclassifies items in the financial statement in accordance to paragraph 40A and 40B of IAS 1. Because of time, I would have loved to explaining this and every other component of IAS 1. In addition to the legal framework you should have understanding of, I will also employ you. We will share copies of some of these documents on the WhatsApp group after this session. I will also employ you to download these standards, particularly starting with IAS 1, and study them. It will help you in having a better and informed understanding why certain things are done the way they are done, particularly what also informs the chart of accounts that we'll be talking about today. All right, so before we go, we are drastically moving close to the main discourse. Please, I forgot to say it at the beginning of this session. For all of our participants, we want to take record of those who participated, because at the completion of this 12 weeks period, for those who attended all the sessions, we will give you a certificate of attendance. So for us to be able to keep track of that, I will employ you to, in this order, give your name, the name of the company you're working for, that's your employer, your email address, and your phone number for the affirmation. Please, in that order, I employ everybody to provide, just create your name, employer, email address, and phone number. If you are not currently employed, please indicate it that you are not currently employed. One of the benefits that, please don't just type your name, type it all together, name, your email, your employer, and your phone number. Thank you, Lawal. That is well appreciated. Another reason why we want this information is sometimes we have requests from some of our clients that they need accountants. So if you have this information, particularly for those who are not employed yet, we can easily put a call through to you and ensure that you have the job, particularly if you display the necessary skills. All right. So what are the elements of an account? In paragraph 9 of the IAS 1, it provides there certain elements of an account. So when we say elements of an account, what are we referring to? We are basically referring to income, expenses, assets, equities, provisions, and liabilities. So every time you record a business transaction, let's say a new bank loan, an invoice from one of your clients, a laptop of your office or etc., you have to record it in the right account. You cannot record it in the right account if you don't know the appropriate element of an account. So if my company purchased a laptop, say for example, I know that if that laptop is meant for use in the company, then it is a good example of my asset. If that laptop is purchased for resale, then it is not my fixed asset, but rather my current asset. If I've taken a loan from a bank, that loan should be nomenclated as a liability. If I have given a loan to another party, that loan receivable is no longer a liability, but an asset. So it is good for us to have a good understanding of what makes an asset, what makes a liability, what makes an equity, what makes a provisions, what makes an income, and what makes an expenses. Without the knowledge of this, we may not be able to come up with a proficient, a very good chart of accounts. You have to record it in the right way and in the right account. But how do you know which account to record it in? The chart of accounts will tell you. So in our next slides, we will go over what what in accounting is chart of accounts. So when we say chart of accounts, what are we really talking about? How does it look like, and how will it affect or impact our preparation of, our preparation of financial statements? So please be very attentive. We are gradually entering the main discourse. The importance of this cannot be appreciated without a good knowledge of what an element of an account is. I've earlier explained that an element of an account will comprises the following caption: assets, liabilities, equities, income, expenses, including gain and losses, and provisions. So if I want to confirm from you, which among the chart of accounts do you think impairments, provisions will be? Or just say impairments. Impairments. Which chart of accounts, which element of an account do you think this will belong to? Which element of an account do you think impairments can be categorized? Expenses, that is very correct. Expenses. Okay. What about right of use of an asset? ROU. What do you think? What do you think ROU? What class can we categorize it? Okay, current assets. No, nobody, whoever that says current asset is wrong. Is right, is what do you call it? Fixed assets or non-current assets. Sometimes we may still categorize ROU as a current asset. That is when the right of use of an asset is for a very short time period. It may be a current asset. So this is to further buttress what are the various captions under elements of account. All right, so companies in different line of business, we have different outlook of a chart of accounts. So what we are calling, or what we refer to as chart of accounts, is just the various ledgers that are built or developed or structured under each of these elements of an account. That is what informs what your chart of accounts will look like, right? The chart of accounts should give anyone who is looking at it a rough idea of the nature of the business. You know, I told you earlier on that in some organization, depending on the nature of their business, not all the elements of an account will be present therein. So if you don't have provisions, of course, you may not have any item as part of the chart of accounts of that entity. If you don't have PPE, or non-current assets, then you might not have any other item that is expected to be therein. So we need to be able to identify what are the various elements of an account and what are the requisite ledgers that will capture the activities under each of the elements of an account, right? So whether you are using an automated accounting reporting software or otherwise, after identifying the name and the reporting period of the reporting entity, next is ensuring that the relevant ledgers relating to the reporting entity's operation are rightly classified under the appropriate elements. So please, for those who have understanding of how to using Sage, Peachtree, QuickBook, and the likes, You will remember that when you were to set up the accounts in those software, you will be expected to provide the details of the organization. The next thing is to set up your chart of an account, right? And you can only set the chart of account correctly after you have understand the nature of that business and the various elements of the account that are peculiar or related to that business. So today, who is this? Who is making this noise? Please check to be sure that your mic has been muted. So we are looking at how do we in practice develop this chart of accounts. We are gradually looking at, because as much as possible, we want this to be as practicable as possible. The chart of accounts is designed to be a map of your business and its various financial parts, right? So it gives you an understanding of the skeletal structure of the financial reports. So if you look at it, you will see the various captions under the current assets. You will see the various captions under the non-current assets. You will see the various captions under the equity. You will see the various captions under liabilities, provisions, expense, and income. A well-designed chart of accounts should separate all the company's most important accounts or ledgers and make it easy to figure out transactions and how they are recorded, right? Please ensure your mic is muted. Then the last one is, it should let you make better decisions. So you want to know when you want to credit an account or you want to debit an account in line with your double entry principle. Having a fair understanding of the chart of accounts will ensure that you are reaffirming what has been posted and it is said to be correctly posted. So this is also an insight. So I will want to swap to seeing what are the various elements and how do we create the chart of accounts. Please confirm if you can see my Excel screen. I will employ you to be very attentive now because this is a practical section. This is actually where we are going. Please indicate if you can see the Excel. Okay, we are good. So remember, I gave you what we call the elements of an account. I did mention assets. I did mention equity. I did mention liabilities. I made mention of income or revenue, expenses, then provisions. So in a chart of accounts, you will have the name of the company. You have the chart of accounts. You have what we call the account codes. You have what we call the elements of the account, and you have what we call the ledgers, right? Now, so what we have done, this is to be used by an organization that is not already using an accounting software. So if in your organization, you are not using an accounting software, with this insight of what we are discussing today, you can eventually go back and develop the right chart of accounts for your organization, and that will then flow into the trial balance and every other ledgers and all of that. So we are just discussing how you can, with the use of Excel, make up a structured reporting framework for your organization. Then for the benefit of those who are not currently working or who have not been able to secure a job because of the knowledge gap, please, this will also be an important insight for you. Now, for emphasis sake, we have elements of an account. The very first one is assets. And you can choose to give any code that you want. In my own way, I have given this code of 150s as the code for anything that is an asset. You know that under assets, your asset can either be non-current, current, investment property, and others, right? So under the non-current, we have a typical example of PPE. We have under it, a typical example under PPE is your office furniture. You could also have computer equipment. You could also have motor vehicles. You could also have office. Okay, I think I repeated office. Okay, the first one was office furniture. The second one is office equipment. Next is plant and machinery. And the last one is land and building, right? What are the code? Look at this, the trick or the technique I use in forming the code. Generally, assets are identified as 100,000, 100,000. But because there are different types of assets, the ones that is related to non-current asset, it's 101,000. So other examples I have under non-current assets, I now make the number very serially. You know, PPE is not the only non-current asset we have. So for PPE, you notice that the number goes very much with the above caption that you have it under. So you have for PPE, I have 101, 100. So all the other captions under PPE, I have 101 and 1, 101 and 2, 101 and 3, 101 and 4, 101 and 5, and 101 and 6, right? What are we trying to do? What we are saying is that by the time we get to the posting sections, which would be the subsequent class we'll be taking, anytime office furniture is acquired, for me to post it, I will make sure I'm using this code, right? So ensuring that it is rightly posted. I hope that is taken. Please confirm if you understand what I have explained thus far. Just indicate yes if you understood what I've explained, or simply ask question for me to repeat it. Okay, good. So please, I want to go over it again. Why are we doing what we are doing? The end goal is we want to, in an Excel template, be able to set up our various financial statement components, right? But before we get to preparing these statements, how do we set up our chart of accounts? And that is the first thing we have looked at. First of all, you need to be able to identify what are the elements of an account that is peculiar to that organization, right? Under each of the elements, what are the various captions? So we have identified the first one, assets. Under asset, we recognize that the ledgers we will have will be under non-current asset. We have a typical example of what? Of property, plant, and equipment. And under property, plant, and equipment, we have the following ledgers, right? And we have been able to systematically structure the code. Somebody give me a new asset that has not been mentioned. Just so anybody give me any asset, and you see how we will create an addition to this. Mention any PPE that have not been mentioned in this caption. Can somebody give me an example?
Office improvement.
Office improvements. Okay, that's a very good one. Now let's see, let's assume that when you came into the company, you already have this start of accounts there, right? And upon your resumption, you now have additional PPE item called office improvement. How do you create the chart of accounts? If you are using accounting software, it's very easy because it has been automated. You can easily go there and get it done. But how do we get it done in this? All you need to do is to insert a row. Insert a row here and type in office improvements. Why do I put it under PPE? Because that is the appropriate element of an account that is suitable for this. Somebody is saying he cannot see. Please confirm if you can see my screen. Please confirm if you can see my Excel screen. Hello, okay, good. So Lawal, you might need to check your network. Maybe it's your network that is causing, other people can see. So what we are trying to do is we want to create an additional PPE. You observe that the first one has 101, 101, 101. That is 101,101. Computer equipment has 101, 102. 101,102. Who is this? Mute your mic, please. Motor vehicle has 101, 103. Plant and equipment. Office equipment has 101, 104. Plant and machinery has 101, 105. Please mute your mic. Mute your mic, please. The land and building has 101, 106. Who can tell me what should be the appropriate code for office improvements? Looking at this sequence, what should be the appropriate code for office improvements?
101, 107.
101, 107 is as simple as that, right? So as many assets, additional assets that you create or that the company has, that is how you'll be making additions to the existing chart of accounts, right? Akitayo is not one, it is not 11070, it is 101, 107, right? Now, look at this question. If I say we purchase additional office furnitures, do I need to create another chart of, another account code for that?
No, sir.
Why?
Because we already have a code for that. We already have that.
Exactly, fantastic. So that is the point we are trying to make it, right? So putting up this chart of account help you to systematically structure the outlook of your ledgers, by extension, your trial balance, which we will see later on, and the outlook of your extended trial balance, the notes to your account, and the proper financial statements. So let's look at the second one, still under assets. We have the depreciation aspect of the PPE. Now, look at the PPE itself. They all started from 101, 100, and it goes like that. So it goes on like that. So when we get another cap under another ledger, that is the accumulated depreciation for PPE. Look at the sequence. I'm not using 101, 108, right? The caption for PPE itself is 101, 100. So the system I have created here is that for my accumulated depreciation, I use 101, 200. So anything accumulated depreciation starts with 1012, then something, something, something. So the first one we have there, office furniture, it is 101201. The next one is 101202, 101203, 101204, 101205, and 101206 for depreciation on the land and building. But I need us to do something here. Because land does not depreciate, and anytime you are reporting your financial statements, if building and land are combined together, please, you cannot depreciate land. So it is very essential for you to separate them. So let's separate the land from building by creating another chart of accounts. So see what we do here. I will have to remove a land from this and make it building alone and create the next one to be land. So who can give me the account code for land now? Account code for land should be what? Account code for land. Exactly, correct. So then we need to make adjustment for the two other ones we have created. For office furniture, we already have it. Computer equipment, we already have it. Motor vehicle, we have. Office equipment, we have. Plant and machinery, we'll make these just building alone. While the next one will be office improvements. So what will be the code for depreciation on office improvements? What is the code, please? Of depreciation, accumulated depreciation on office improvement to be worth?
101,207.
Awesome, awesome. So that's good. Then another class of assets that we have is investment property. Who can tell me the standard on investment property? What is the accounting standard on investment property? What is the accounting standard on investment property?
IAS 40.
How is investment property different from land and building that we have reported above?
We measure our investment property subsequently using fair value method. Why that of land and building is evaluation.
Sorry, take that again. I didn't get you well.
I said at initial, we measure both of them using cost, but subsequently we measure our investment property using fair value method. Why we use evaluation method for land and building.
Oh, okay. Let me give you a typical example. You are the accountant of a company, and the company, actually, let's say the company is an audit firm, right? Okay. And they have a land and building that they use for the business. But because they are not using all the whole building, they let the other. How do you classify the land and building in your, according to the ledger? Will it be just under direct PPE or will it be under investment property?
I think it's going to be separated. The portion that is meant for rent is going to be under investment property, while that of the one that is not meant for rent is going to be under PPE, I think.
Okay, so for familiarization, anytime you want to respond, always mention your name. Who has just responded now? Tohib, right?
Yes, sir. Tohib.
Okay, okay, good. Tohib, which company do you work with?
I'm a student, sir.
Oh, really? Which school?
University of Ilorin.
Oh, what level are you?
200 level economics departments.
Okay, so Tohib, I'm giving you a slot. Anytime you are on holiday, I'll give you a slot to come and intern in my company, KCP.
Wow. Thank you very much, sir.
I'm giving you that slot.
Yes, sir. Thank you, sir.
All right. So that is a very, very good contribution he made. And please, let's get it clear. Anytime you are reporting the financial statements and a company has land and building, a land and building can be a PPE. It can also be classified under investment property. And for those looking for a job, this is a possible question that can be asked in an interview, right? So the appropriate thing for you to do is, if that company is not primarily in the business of rentals, right? The portion of the land and building used for the primary purpose has to be separated from the portion that is used for the rentals. The rental is just like an additional income to them. So the portion that relates to the rentals will be reported as investment property, while the one that relates to their day-to-day purpose of being in business will be reported as PPE. So you can see why your knowledge of elements of an account and your accounting standard is very relevant to you setting up or creating your chart of accounts. So if you have this peculiarity and you have wrongly reported everything or mapped everything under PPE, then you are probably just misinforming the users of the financial statement. So please take note. And for the purpose of further enlightenment, I will urge you to, we have identified two standards now. The first standard is IAS 1, presentation of financial statement, and the second standard is IAS 40, investment property. You cannot be a good financial accountant if you don't have a good understanding of these standards. So create time to read about them, and possibly if you have any clarification to make, you can private chat me or put up that question in that group created for this training. Questions relating to your job or relating to your personal study, relating to what we have, the purpose for which you have set up this training or mentorship, can be discussed on that group. Anything outside that, please don't let us make that group be busy with irrelevant information. So going by that, how do we map the investment property? How do we create their own chart of accounts? Remember, for the category of PPE, we have 101,100. For the category of accumulated depreciation, we have 101,200. For the category of investment property, if you want to follow that sequence, you have 101,300. While examples under investment property would then be 101,301 and 101,302. Note that you can only have two categories of investment property. It's either it is land or it is of building. No other forms of non-current assets other than these two can be classified as investment property. Is that clear? All right, so the next one is intangibles, intangible assets. Who can tell us the standard on intangible assets? What is the standard on intangible assets? Please make sure you are not going to check in online. Or what is the standard on intangible assets? IAS 38, that is very correct. IAS 38, that is another very interesting standard that you need to personally study, right? And what that means is intangible assets are those assets that are not visible, but we know that they have impact in our what? Productive activity. A typical example of them is goodwill. So you can have a software that can qualify as intangible assets. You can have trademark that qualifies as intangible assets. You can have goodwill that qualify as intangible assets. Is that clear? So, and you can also have development costs, not research costs, that can qualify as intangible assets. So under intangible assets, we are using 101,400 Then examples under it would then be 101,401, 101,402, 101,403. Can somebody give me an additional example of intangible asset that have not been mentioned here? Let's say patents.
Thanks. Yeah.
Patents, the cost of
Okay.
patents. What will be the account code? What will be the account code? 101404. Okay, correct. Somebody else also give us copyright, brand name. They're all good examples of intangible assets. So then you know that according to IAS 38, intangible assets should not be depreciated, but should be subject to amortization. So the appropriate code under that is 101,500. You are at liberty to structure your own code, right? This is a typical example of those who are doing coding, right? This is how it all started. Somebody else can just transit this into developing an accounting software of its own. So we have intangible asset amortization. Example under it is software, inventory software, accounting software, trademark. Then we have the additional one we have just created, patents. Please, this should not be costs. It should be the amortization. And the code for this will be 101503. I mean 504. Then another category of still under assets is the current assets. So you could see that all the tangible or the non-current assets, they started with 101. Okay, somebody just asked, what is the difference between amortization and depreciation? In layman's interpretation, they are the same thing, because we are actually writing off the wear and tear or the portion of a perceived asset that be used up. But in accounting terminology, we relate depreciation to tangible assets. We relate amortization to intangible assets. So it is wrong for you to say you are depreciating patent rights. It is wrong for you to say you are amortizing plant and machinery. Rather, it will be you are depreciating plant and machinery and you are amortizing patents. So the code for current assets is 120000. Examples of the current assets are inventory, receivables, prepayment, other short-term investments, other current asset, cash and bank balances. So we create examples under them. Let's assume that under cash and other cash and bank balance, let's assume we have different accounts. Let's say we have an account with First Bank PLC. Who can tell me what should be the code? If you have an account with First Bank PLC, what should be the code? What should be the account code? And we have another one for Guarantee Trust Bank.
Hello.
Yeah, you can talk.
Okay, the account code should be
126001.
Okay, to avoid confusion, can we use the chat box?
Okay.
Let's use the chat box because everybody is talking at the same time. Okay, Abdul Wahab, very correct. Because you know that cash and bank balance is already 126,000, right? So the appropriate code that will be a continuation from the existing one is 126001. Very correct. What will be the code for GTB? It will then be 126002. Okay, let's look at this too. Let's assume that we have different categories of receivables. Assuming we have PZ Limited as a possible receivable, and let's say UAC Foods. UAC Foods. Who can give me the code for this? When you are creating the chart of account for this, who can give me the code? Code for PZ will be what? Correct, 122001. What about UAC Foods? 122002. Awesome, very correct. Please, I just want to be sure that we are all together. If we are, and you understand all that I've explained thus far, please indicate yes on the chat box. All right, so we can go on. So the next one is equity. Okay, equity is another element of an account, and under it we are having share capital, share premium, shareholders deposits. And you can see that it is 200,000 for equity. We make it under for share capital is now 210,001. Share premium is 220,000, while shareholders deposit is 230,000. Assuming there are various categories of your share capital, you have ordinary share, you have what other class of shares do we have? Let's say founders shares first. The founders share.
Preference shares.
Ordinary. And let's say you have this category called the founders share, right? Preference share will not come in here, except it is a non-redeemable preference share. Preference share ordinarily is seen as a loan to the company because you take a fixed returns. But if it is an irredeemable preference share, right, it then looks like it is not necessarily a liability, but a share capital. So take note of that. So the appropriate code for this will be 210001. 210002. All right. So let's look at reserves. Reserve is 300,000. Reserve is 300,000. Other examples you can have under reserve is retained earnings, revaluation reserve, general reserve, and you can see the trend, right? 310,000, 3220,000, 330,000. Then under liabilities, you have the non-current liability, you have the loan, you have the debentures, you have shareholders loan, you have deferred tax, then you could also have preference share here. And the code for preference share will then be 4015 500. What is the standard on deferred tax?
IS 17.
Ah, no, it's not
No,
correct.
IS 12. IS 12. IS 12.
IS 12, very correct. Very correct, IS 12. All right, so then under current liabilities, just follow the trend, 500,100, 500,200 for Akura. So you can create as many as possible. Other current liabilities, we have salary outstanding, payee payable, pension contribution payable, VAT payable. So you can see the trend, 501,100, 501,200, 501,300, 501,400. Corporate tax payable. Under that, we have company income tax, education tax, capital gain tax, National Information Technology Development Agency, that is NITDA levy. And you can see the code too. Under revenue, it starts from 600,000. You have your trading income, sales, investment income, unearned income, and all of that. Other income, you can see the code too. So I just want you to go through the trend. Under expenses is 700,000. I'm just trying to hasten up because of time. Selling and distribution expenses, we can create as many examples under that. Then personnel costs, you can see 702,000. You can create as many examples under that. Then depreciation, 703,000. You can create as many examples under that. Repairs and maintenance, 704,000. We can create as many examples under that. Finance costs, 705,000. We can create as many examples under that. Audit fees and expenses. I want to give another person a slot for internship. That is for whoever that is currently not working or is looking forward to doing an internship in an audit firm. Why is that? Is if you answer this question correctly, why is it that audit fees should be separately disclosed on the statement of comprehensive income? Audit fees should be separately disclosed or should be disclosed as a separate line item as opposed to being a note to the account. Why is it so? If you have it, if you get it correctly and you are not presently working, I can give you a slot for internship. Who has the answer?
I think it's a legal requirement by CAMA.
Where is it in legal in CAMA?
I don't know the section now.
Okay, so let me bring you to speed. CAMA did not say expenses incurred on audits should be separately recorded, but rather it only says that it only outlined the responsibilities of auditors during audit of a financial statement. So it's not in CAMA. Who has an answer? Remember at the beginning of this class, I said there are some regulations and legal framework. So FRCN actually gave a regulation in one of its regulations. It provides specifically, that is the FRCN code. It provides specifically that when you are reporting your financial statements, any amount incurred in respect of audits should be separately reported on the face of the financial statements. So why we should do it, if you have been preparing our financial statement before, and your audit expenses, you've been modeling it up as part of the other expenses, it is wrong. Whether as auditors or as a company, it is wrong. It should be separately stated on the face of the account. This is what I'm saying. Look at this statement of comprehensive income now, right? If you look at the items here, you see personnel expenses, you see selling and distribution expenses. I'm sure you can see my screen.
Yes.
Yeah, so
Yes.
Yes,
you
sir.
see depreciation, you see repairs and maintenance. You can see I'm separately stating audit fees and expenses. So it is because of the CAMA regulation provided by FRCN, but not CAMA. CAMA did not state that audit expenses should be stated on the face of the account. So please take note. That can also be an interview question. So under it, we will have the entertainment of the auditors, professional fees, and other consultancy that is paid or done by the auditor. So you have the code. Please, this code, the correct one should then be 706-001, 706-002. Then the next one is tax expense. You know that tax expense is a component of your income statement. It should also be stated as a separate line item. Let's go back to the statement of comprehensive income. You will see it here. You can see it, taxation. I believe you can see, confirm if you could.
Yes.
Can you see
Yes.
taxation
Yes,
as a
sir.
separate line
Yes.
item? Good.
Yes.
So it should be separately recorded. So we should have 707,000. While other components there, the components of your tax expense could be company income tax, education tax, capital gain tax, deferred tax. You know, your deferred tax can be deferred tax assets or deferred tax liability.
Liability, yes.
Yeah, so later on, we should be talking extensively about all of these components of taxes. How do you do the computations? Practically, you will see. So that is what you need to know as far as the chart of account component is concerned. Having completed this, let's now see how we should translate it into our ledgers. What should be the outlook of our ledgers? The next sheet you are seeing here. Okay, let's even say before you get to your ledgers, you know, you should, before you get to your trial balance, I mean, let's see how the outlook will be in your ledgers. So this is a formulated ledger. Whoever that is using this to preparing the accounts will state who prepare it, who review, who approve it. What is the element of an account of this? You can see the element of account is non-current account, right? What is the account code? See how we link the account code. These non-current assets, is computer and equipment. So what will be the account code for computer and equipment? We go back up. We have computer and equipment or computer equipment. You can see it is 101102. So we have reflected it on the ledger,
Yes.
right? Later on, I will have to explain to you how do we make up these ledgers, right? But the purpose of this class is just to know how to do your setup. Please, who is distracting? Somebody is distracting. Mute your mic, please. Mute your mic. Mute your mic, please. Please, wherever that this noise is coming from, we will delete you from this training section totally if you don't take to caution. Oshodi, Ahmed, the noise is coming from you. Take this as the last warning. If you don't mute your mic, we will delete you totally. So this is how you translate, you relate your chart of accounts to your ledgers. You can see how the ledger, computer and equipment ledger will look like. Let's look at another one, furniture and equipment. We'll try to make up this ledger. Let's see. So under the element of an account is still non-current assets. What will be the account code? Account code will come back to our chart of accounts. Are you seeing the technique? Furniture and equipment is 101104, right? That is how to link it. We want to create the one for office equipment. Office equipment. The account code for that will be office equipment. Office equipment is actually 101104. Furniture and fittings was wrongly linked. So let's relink that to office furniture. Let's call it office furniture because that was the name of the ledger. Office furniture. And we change it here also to office furniture. Are we together? Somebody is still making a noise from background. Danjuma, mute your mic, please. So I believe you could see how to transit from your chart of accounts to your ledgers. You can make these for as many ledgers as possible, right? Then from there, we will go to trial balance. How do we set up our trial balance such that it will show the requisite chart of accounts, the codes, the elements? So this is what we have. We are reflecting all the chart of accounts in here all the account code in here. We have the elements of the account, and we have the PPE, we have the depreciation and every other component. By the time we start imputing figures, everything will flow into the debit and the credit from the ledger to the trial balance, from the trial balance to other components of the account, right? So this is how it will look like. Then the next one that I want to give to you is the ETB. How does the ETB looks like? What do we use the ETB for? This is particular common with auditors. This is a common tool that we use when we are preparing or when you are undergoing or conducting an audit. But what does extended trial balance means? Extended trial balance is just like your regular trial balance, but it provides, in addition to the regular trial balance, adjustments that could have been made on the figures, on the trial balance figures. So you have the account code being reflected, you have the account the elements of the account and the various ledgers, right? So you will still see in our subsequent class, how do you use this extended trial balance? How does entries flows therein? How do we use it to make up our income statement, our balance sheet before we start to preparing the various accounts, right? So that is the first part of what you need to know. The next thing that you also need to know is that how do we make up our fixed asset register? You know, fixed asset register is a first document that actually bears details of our PPE, their location, the cost of the item, the numbers, how many units do you have, and who is actually using it. So this is how it looks like. If you have been preparing your financial statements, and you've not been maintaining your fixed asset register, auditors will always flag it as an exception. So this is how to maintain one. You draw up all these captions, right? So if we bought or we purchased an office equipment now, say fan, say ceiling fan, I will come in here and say the office equipment that we bought is ceiling fan. Under the item description, I've indicated ceiling fan there. Maybe that ceiling fan is in the general office. I will indicate general office as the location. And the user in this case will be the general use. Are you with me? The date of purchase, let's assume we purchase it on 1st of April 2022. What was the cost of the purchase? Let's assume it is 400,000. How many quantity of this do we bought? The cost of purchase here should show the cost per unit. How many quantity do we bought? We bought, let's say 5. And automatically the total cost will be reflected there. The depreciation rate, except the company otherwise states, may be taken to be 25%. The tenure is the number of months of the useful life is 48 months. How do I get the 48 months? 12 months in a year times 4 years, 4 years. So that is 48. Then in our subsequent class, I will tell you how you fill up. When we are actually preparing a financial statement, you will see how you make up all of this. So these are all that you need to know. We can replicate this for furniture and fittings, computer and equipment, then other components of the fixed asset you might have. Any question before we wrap it up here? Any question? Please ask your question. Do you have any question on what I've explained thus far? Do you have any question on what we have explained thus far?
Yes. I think I have a question. Hello? I'm
okay, relating to this topic and all we have explained.
Yes. Though I've understood everything you've said so far, and is a very impressive.
Please, your name first.
Abdulkadir is my name.
Okay.
Yeah, thank you. Well, this is a very impressive mentorship class. We really appreciate. Thank you so much. And I must tell you that for the benefit of those that are not accounting students from the beginning, like me, I studied chemistry. You understand? And so we are trying to from our own field to this field, so that whenever we want to have a class like this, most of these concepts, accounting words should be briefly explained before we go into the main explanation. Like when you say legal and regulatory frameworks of financial statement, brief explanation on that, accounting standards, brief explanation on that, so that we from another line can cope. Okay. Are you with me, sir?
Yeah, very important feedback. I actually make erroneous assumptions that everybody has an accounting background. So that's why I didn't go through all that. But it's well noted, we will take cognizance of that.
All right, thank you. And again, you know, this is a very interesting class and it should be interacting. Like you are doing, we are contributing, you are doing, we are contributing. And I believe this is the first time we are coming. Maybe from the next classes will be contributing as well. So you alone should not be doing the talk alone. Thank you very much, sir.
Thank you very much, Abdulkadir.
Yeah, thank you. Yes, thank you.
Any other contribution from any person or question? What feedback do you have for us? What clarifications do we want us to make before we wrap it all up?
Good afternoon, sir.
Yeah, it's actually evening now. Good
It's
evening.
actually evening. Thank you.
Sorry. Good evening, sir. Don't mind me. So I was so engrossed with the teaching that I didn't even know that time is passing already. So
Oh, really?
I sincerely want to say thank you very much for this opportunity, because after the class, after some minutes to the class, I was telling myself that if I have to pay some good amount of money to have access to this, I won't regret it. For having this at the platter of God to me is something I need to express my gratitude and appreciation to. So thank you very much, sir, regarding the knowledge you have shared to us, and I'm very I've received value for today. So, sir, I just want to seek clarification, because why you asked us to drop our details regarding the attendance certificates, certificate of attendance. I wanted to ask that what if I will change my job or my place of work before the end of the class? Is there any avenue for me to make that known to the
Of
manager, so that
course. Of course.
okay,
Of
sir.
course.
Okay,
Of course.
I
That's
just want to
very,
see that clarification. Okay, sir.
yeah. Of
So
course.
I have one other question, sir, but I felt maybe I should just hold on, because I've seen some little bit insight to what you taught us today, but I've never knew that this is the way it works. Do you get me, sir? So I
Okay.
was trying to be inquisitive that is it possible for us to have access to this beautiful outline that you have shown us today, or but I don't want to be too forward, sir. So I just want to ask that in advance.
Okay. Actually, these are some of our intellectual properties. But let's see. Maybe I may change my mind. I have the intention of making the slides available, right? And okay, I'll give you this. I'll give you the programmed Excel sheets. I'll give you.
All right.
I'll
Thank
make
you
it
very much.
available.
Thank you very much.
Thank you so much.
Thank you
sir.
very much. Thank you. I was to ask for that too. Thank you. Thank you. It will be very, very good for us. Thank you, sir.
Yeah, but more importantly, you need to know how to adjust it.
Okay.
Do you understand?
Yes.
When you want to
okay,
use.
Sir.
Yeah.
Okay.
Okay, sir.
Yeah.
All right. Another person asked another question on what is right of use of an asset. Okay, let me quickly explain that.
Okay.
Right of use of an asset, in a simple word, is actually what we used to call lease. When you have a right to use an asset that is not your own, right? We call it lease. So there is a new standard that we call IFRS 16 that actually imparted on the formal standard. And that standard actually emphasized that all categories of lease, in the formal standard, we used to have 2 categories of lease. Are we together? So the new standard, which we call IFRS 16, try to consolidate the 2 different types of lease we have, the finance lease and the operating lease, as just one category of lease. Are you there? So in that IFRS 16, the new name given to lease is then called right of use of assets. So anytime you see right of use of asset, we are actually referring to lease. And we call it right of use of asset because it is the name that have been proposed by or in IFRS 16. Don't forget that IFRS 16 seek to replace partly, not totally, partly IAS 17, right? In our subsequent class, maybe not in this particular semester, we still have to take some complex aspect of accounting for the benefit of everyone. So I hope that answers your question.
Please, to round it up, please, I just have this little question to ask. I want to know the difference between, are you with me, sir?
Very much with you.
All right, thank you. I want to know the difference between inventory and capital. That is one. Then number two, what's the difference between account receivable and account payable? Thank you, sir.
Okay. So I promised everyone without basic accounting background that all of these terminologies, before we have our next class in accounting, I will brush through all of them, right? Apologies that I make assumption that everybody will have this background. Now, to answer your question, when we say receivables, receivable is simplified, or another word for it is debtors. When I buy something from you on credits, and I am indebted to you. So to you, I am your debtor. So if you don't want to call it debtor, you can also call it receivable, right?
Okay, receivable. Okay, yes, sir.
Yeah.
Yes, sir.
So that is what receivable means. The second one you ask is inventory, right?
Yes, inventory and capital.
Okay, inventory, another word for inventory is your stock. What you have acquired that you want to resell is your stock. You can either call it stock or you call it inventory. So if I am selling bags, all the stock of the bags I have will form my inventory, right?
Okay, yeah.
Then the third one is capital. The amount that the owner of a business invested in its business is called capital. So if you are operating a one-man business, we call it capital.
Okay.
If you are operating an incorporated limited liability company,
yeah,
we don't call it capital, we call it equity or share capital.
Yeah. Okay, yeah. Thank you.
So that is it. But if it's in the case of a non-profit making organization, the amount that the members has contributed to start that non-profit making organization, we don't call it capital, we don't call it share capital or ordinary share, or rather we call it accumulated funds.
Okay, yeah.
Accumulated funds. So whether capital, equity, or accumulated fund, they all means the same thing, but can be used in different ways.
Yes, sir. Okay. That's taken, sir. Thank you very much, sir.
All right, so I don't know whether there is still any question. We still have a few minutes. This class is a 2 hours class, and strictly we want to adhere to our timing, 6 to 8. We will not take extra, we will not take more. All right, so any other question? Director's current account. Somebody is asking whether director's current account work in the same as capital. No. Please note, for those who are accountants in the house, whenever you are working in a company and the owners of the company, other than what they have contributed as capital, if they added other funds into the company, you need to check the value of the equity, that is the capital, with the share certificates. That is the certificate of incorporation, right? Let's say, for example, the share capital, the share certificates has an authorized share of, say, 10 million naira. And the share capital that have been contributed is also 10 million naira. If the owners of the business bring in additional funds, you cannot report it as share capital again. You can only report it as share capital after you have applied to CAC for increase in the share capital. So other funds that the shareholders bring into the company is either reported as shareholders' deposits, or you simply report it in the director's current account. So usually director's current account is a ledger that shows all the additional funds brought into the company by the owners of the company, or borrowings by the owners of the company from the company, right? So it accounts for the movement between the company and its shareholders or its directors in terms of funds brought in and funds withdrawn. Ikechukwu, I believe that answers your question. Okay, for those who want other colleagues to still be part of this platform, please private chat Amina. Amina is a program coordinator in a better position to confirm whether we can still add more, right? So Akitayo, you can actually private chat Amina. She's also on that WhatsApp group. All right, any other question, please?
Yeah, Esther, I want to ask, and I'm sure that the class is being recorded. How can we get access to the recording and the recorded class so that I can go through the lessons again and have a better understanding?
All right, is it actually showing recorded? Okay, we are recording it, so we'll share it.
Okay, sir.
We'll definitely share the link. No, we won't share the link. What you will have to do, please, most of this is not the first public training we have had. We've had several ones last year. Is on our YouTube account. So Amina will share the YouTube link. Please, you can get the recorded section not later than Monday. Everything will be available on the YouTube link. Please make sure you follow us on the YouTube and other social media handles of ours and invite others to also follow it. So for those who missed it, let them know they can get it on. But please, you note that the explanations and this opportunity you have when you participate yourself is different from when you go to listen to it. So I encourage you to be part of our sessions. The next training we'll be having will be tomorrow, same time, 6 o'clock, I believe so, 6 to 8. Please ensure you are available on time so that we can start on time without wasting time and complete it not later than 8 o'clock. So in the absence of any question, I want to say a big thank you to everyone.
Thank you too, sir. We really appreciate you, sir.
I want to also encourage you that I also want to encourage you that don't let it stop here. The learning should continue. Your questions or discussion on this topic can actually continue on the WhatsApp group till when next we'll be having another topic on financial reporting, right? So should you still have any other question, make sure you can private chat me or simply bring it up on the WhatsApp group. Or if in the course of your job, you are stuck on any area and you needed guidance, please, you can ask me or bring up the question on the WhatsApp. We'll be glad to be of assistance. Our foremost goal is to ensure that we have as many accountants as possible that are not just qualified, but very, very knowledgeable. It will do us a lot of good when we see that people in the other profession are talking well of proficiency and skills of our fellow accountants. And that is our foremost goal for doing this, right? Don't forget, this is coming from KCP. KCP is a parent company. We have a sister company called Adekunle Cole & Co. Adekunle Cole & Co is the audit arm of KCP. While in KCP, we have the following services: HR recruitment services, regulatory and corporate communication services, tax services, training services, and account support services. Please, if in the course of your relationship with your colleagues or your employer, you have any need for a service, do not hesitate to reach out to us. We'll be glad to be of further service to you. Once again, good evening, and I appreciate every bit of your time here.
Thank you very much. Thank you.
Yeah, thank you.
So
this is where we'll be drawing up the curtain today.
Okay.
Hope to see you tomorrow. Thank you.
All right.
Thank you very much.
Thank you so much, sir. Thank you.
Thank you.
Bye.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Please, if you have not dropped your name and your other details, do so because we are taking the attendance. Ensure you have your name, your current employer, your phone number, and your email.
Wow. Most people are trying truly. It's free class. So today we Mukawara, Zamukare June, 12 weeks. It's accounting, taxation, and auditing. Today is accounting. Tomorrow you will take auditing.
For which program are you doing?
Oh, accounting, but I think it's a free class. It's a professional training.
Okay.
Mm. Mm-hmm. So it's possible. I'll go and scale from other disciplines so I can pass through the training. I miss another class. I supposed to have another one 7 to 8 again.